Hello, everyone. Hope everyone is doing well. All right. So, if you are following the news, we keep hearing about President Trump trying to push for the one big, beautiful bill. He wanted to be on his desk by July 4th, which is next week. So, there is a lot of pressure coming to try to make this bill pass. And we spoke before about what's included in this bill as far as the House when they passed on the bill, and now we have the Senate version. And there is a difference and multiple differences actually between the two versions that we have between the House and the Senate, and then there should be some reconciliation to get to the final bill that gets signed by President Trump. So it's very, very important for us to know what are these differences and keep track on, okay, what's going to happen eventually, and in the very end, how this bill going to look like, and how can we be ahead of the game to plan accordingly. All right, so let's dig in and talk about these differences together. All right, so, but as you know, I always like to start with a joke. So let me get that here and share. All right, so this is our joke for the day. You made more money, and this is the IRS agent talking to a taxpayer and saying, "Oh, you made more money last year than you did this year before, than you did the year before. You people never learn." And I guess you understand that when you make more money, you get to pay more taxes and you get to phase out a lot of tax credits and breaks and all of that, which is part of what we're going to talk about again today. All right, so let's dive in. The key differences between the House and the Senate tax proposal. First of all, the sole deduction, the state and local tax deduction. We keep talking about this, that it's now capped at 10K before the TCJA, the Tax Cuts and Jobs Act that passed in 2017. There was no limit on how much you can deduct in state and local tax. But since then, they capped it at 10K, which hurt a lot of taxpayers. So the House bill came and it says, okay, let's increase the cap from 10K to 40K, but this is only for adjusted gross income under 500K. So if your adjusted gross income is more than that, you still get the 10K. The Senate bill didn't say anything about this, just put it at 10K, did not increase it for any different threshold. So that's one main difference that we have here. So it depends on your AGI, depends on which one is gonna pass and how this will be reconciled. That will make a big difference in how we plan our taxes. 10K versus 40K. That's a huge difference. A second provision about the 199A, the QBI deduction, pass-through deduction. We spoke about this before, that you get if you have a pass-through entity. So if you have an S corporation, if you have a partnership, if you have a Schedule C, and you get to deduct to 20% of your net income, and it's not subject to taxes. But in this case, the House wanted to increase that from 20% to 23% for certain pass-through income, and they want to make this permanent. So now they want to extend what was proposed in the TCGA and want to make it permanent. The Senate, they came saying, no, we're not going to increase it to 23. We're going to keep it at 20%, but we also want to make it permanent. All right. PTET. Remember we were talking about the PTET, the work around the SALT cap. So the House came saying, okay, we want to repeal the pass-through entity tax deduction for specified service trader business. And specified service trader business is like doctors, physicians, the people that I specialize working with. They wanted to repeal this, so you're not even able to get through it, to get around it using this strategy. But the House, the bill, I mean the Senate, it doesn't want to repeal it or even limit it, and want to make it universally to all pass-through owners, regardless of what type of business. So even if you're a physician or if you're a doctor, if you have your medical practice, you get to make use of it. And they added something. They say the individual owners can deduct their unused sold cap plus the greater of $40,000 of their PTT allocation or 50% of their PTT allocation. So we're gonna find out how this is gonna end up, and I'm sure it will open a lot of questions on how this is gonna be affecting our businesses. If you don't know what's PTT, go back to my videos. I'll explain it a lot in a lot more depth what's PTT and how this was a workaround the 10K cap because as I said, it was hurting a lot of people. And if you had a business, you could have done this to pay the state and local tax from your business, not from you individually, and you get to have that business deduction under your business. Something new, above the line charitable deduction, and that was introduced during COVID time. It was like for 2 years or so. That was above the line deduction. So even if you're not itemizing, you get to deduct up to 150 for single, $300 for joint. In charitable cash contribution, and they made it temporary for tax years 2025 through 2028. But the Senate came, no, they increased the limit. They said actually you can deduct up to 1,000 for single, 2,000 for joint in charitable cash contribution, and they want to make this permanent, not just a temporary thing. This is if you're not itemizing, and because if you're not itemizing, you know that you're not making use of your charitable deduction. What if you're itemizing and you're paying charitable cash contributions? So the House came saying there's no AGI floor as proposed in the Senate plan. So this is actually, we should start here with the Senate because this is totally new. They're saying if you're an itemizer, your charitable contribution are subject to a 0.5% floor based on your AGI. That means that only the portion of your giving that exceeds the 0.5% of your AGI is deductible. And this is something totally new. Before that, you used to deduct everything you have. You didn't have to see how much your AGI is and what 0.5% of that, and only the excess will be deductible. This also will hurt a lot of people, but the House didn't come up with this, and it's something new in the Senate bill. Business tax breaks like R&D, research and development, interest, equipment, those temporary under the House bill. There are temporary extensions until 2029. Under the Senate bill, they want to make these extensions permanent for R&D deduction, for interest deductibility, and for full expensing for equipment like bonus depreciation and so or like you get to have 100% expense on the equipment. Child tax credit. Child tax credit under the House bill was temporarily increased to 2,500 from 2,000 for tax years 2025 through 2028. In the Senate, they want to make it 2,200 permanently starting 2025. So this actually may affect our current tax year. Actually, both of them affect our current tax year, whether it's going to be 2,200 or 2,500. But the main difference here is what's going to happen after 2028. Is it going to go back to 2,000 or is it going to continue to be 2,200? Depends on how this is going to end up reconciled. Senior deduction for the House said that for filers above 65 plus, you get to deduct $4,000. But if your AGI is above 75,000, if you're single, 150 if you're joint, then you don't get this deduction. And this starts this year, 2025 through 2028. But the Senate saying, no, let's make it 6,000 and increase the age to start at age 75 plus. But it also phases out at the same limit, 75K for single, 150K for joint, and for the same time frame, just temporary from 2025 to 2028. And then we'll talk about, okay, will it be extended or not really? Tips deduction under the House bill, it says you can deduct for up to 100% of your qualified tips, no cap, if you have an AGI limit of 160K from years 2025 to 2028. The Senate bill did not cap this deduction, like it's still 100% of qualified tips, but capped at 25,000, and it phases when your AGI exceeds 150, not 160, 150 for single, 300K for a joint, and for the same time frame. Overtime deduction goes the same as with the tips. 100% of qualified overtime is not deductible, is not taxable. There is no cap, 160 individual AGI limit, tax years 2025 through 2028. But the Senate says no, we'll cap this at 12,500 for single, 25,000 for joint filers, and it phases out when the AGI exceeds 150K single, 300K joint, and the same time frame. Bonus depreciation. We know the House wanted to temporarily reinstate 100% bonus depreciation to go back in effect to January 19, 2025 through December 31st, 2029. But the Senate wants to permanently restore this and doesn't want to put an expiration date of December 31, 2029 for this. Excise tax on private foundations. Private foundations now they get excise tax on their investments of 1.39%. So even though they're exempt from income tax, they still have to pay an excise tax on their investment income. Think interest, dividends, capital gains. The House wanted to increase that to 10%. But the Senate wants to keep the existing flat rate at 1.39%. Of course, this is huge difference if the House bill passed. It will affect a lot of private family foundations. The House saying, okay, now we need like $4 trillion for the debt ceiling increase, and we're gonna offset this by borrowings. The Senate saying, oh, this is going to cost us like 5 trillion. And the only way to offset that is to do cuts to the federal Medicaid spending and some other tax credits just to make up for all these cuts. All right, so those are the major differences in the provisions between the House and the Senate. As you can see, it's a lot of differences. We're going to see how this is going to be reconciled at the end, and if which one of those will prevail, which one of those are going to fall out, and how this is going to affect our taxes. So keep an eye on the news, on the all the legislations that are coming up. There is a lot of things to be expected in the next few weeks. All right, we'll keep you updated. And if you have any questions and if you're interested in certain topics for me to talk about, please reach out. All right, thank you. See you next week.